a second standard deviation rhythm, is it? And we shouldn't expect it to be. It's a first standard deviation rhythm. Guys, it's exactly the same. When you go imbalanced, right? So, you know, we've said, let's say the market just starts off in a nice balance, and then something changes and we start to build volume. Okay, guys, you can either build volume. Let me just do this again. You'll see why I'm doing this again. So you, in a nice balance, something changes. You can either build volume here. Do you remember we said new heights come in or whatever, and some data comes in this region, right? Just above the first standard deviation. The alternative is what? You could be in, let's just say you're in this same balance day, right? You don't have to build it here. You might build it here. Can you see? You're either going to have a lump there, or you're going to have a lump of market orders there. It's different. The rhythm's different. In this stage, the rhythm is very much a one standard deviation imbalance, which I like to call a normal trend, right? I do like to use that word just because I find it quite useful to distinguish between rhythm and pace of I mean, I could like to call it imbalance, but in terms of when I'd like to identify rhythm in terms of imbalance, I like to call it different types of trend. I don't know why, it's just always stuck. I call it normal trend, slow trend, or fast trend. So I don't know. I think basically in one of my early days in the prop firm, someone had mentioned it to me as that, and I don't know, it's always just stuck in my mind. I kind of like that term, kind of normal trend, fast trend, and then slow trend is here, basically, where you're doing this, but then you start to develop balance, very much in this VWAP region, basically, which is the VWAP here. So can you see, you're either developing it here, you're developing value here, you're going imbalanced here. Do you see the transition period can start in different regions? What it is the reason I like using this slow, fast, and normal trend is because it helps me identify trading opportunities. And I'm going to show you that when I'm taking trades, depending on obviously how the rhythm is, I'm going to basically take it slightly differently. So again, I want you to be careful when I use this word trend. It's not how you think of it in retail trend. It's more seeking value, but in a certain type of rhythm. That's the only reason I like to call it that, because it helps me to identify different rhythms. So this is going to become clear. Let's actually look at this from a practical perspective. Okay, so we looked at this in the last example where I showed you this developing, right? So can you see, you know, sorry about this. Just get the right type of pen. Can you see where we've got almost this first standard deviation, right? And in the early part of the day, we've got what? Some volume here. Now, I know it's not perfectly balanced, but at the end of the day, at this point, we've got fairly good even distribution in sort of this region, something like that, right? It's fairly balanced. Look what happens. We break, and then we don't come back as you would expect in a balanced day. And what happens is the VWAP changes shape. Rather than being flat, like we saw on a balanced day, look what happens. It moves up. Why is it moving up? Market orders. We talked about this in the last section. So do you see what's happening here? Is I'm getting this volume here. You could almost imagine, you know, I talked about this in the last balance section where I said we're getting this volume building here. You see the profile is changed shape. I can no longer use this. I can't use 70% plus this and 95%. Doesn't make sense because now the amount of market orders in the space has changed. It's dramatically increased. Okay, so my probability of staying up here now is much higher. Okay, than the 2.5%, the 5%, or whatever it was, depending on obviously what standard deviation region we're in. So hopefully that's very clear to you that, you know, it's so powerful, this VWAP, and thinking of it correctly, because it can help you identify when we're shifting market condition. And very much here, market condition is within the 1 standard deviation, right? It's almost like that's the 1 standard deviation. This is why I don't like to be too precise, because you see it did take a blip below and then it just continued up. But my point is, look, once you've identified that this is happening, and what's the rhythm here? In my opinion, the rhythm is very much I called it a normal trend. We're going to talk about this in a second. But you see, every time it pulls back, I can look for trading opportunities. Yes, pull back a little bit further than I would have liked, but you know, you've got 1, 2, 3 trading opportunities for an imbalance, and all of a sudden we're shifting. The mean is shifting. You know, it was obviously originally here, but it's there as we built, you know, more volume in this region, mean shifted, then we built even more volume, then we built even more volume. So what's happening? The VWAP is moving higher and higher. It's just the average. Obviously, if you've got more orders coming in at higher and higher prices, what's going to happen? The VWAP's just going to shift, and you can see it here. These points are just this point, this point, this point. It's just moving higher and higher and higher. The average of each new profile coming in. Do you see? Otherwise, what would happen is I'd need to literally have all these profiles split out, as I said, on my chart. I won't be able to see it. So instead of doing that, I just have the VWAP. And if you think about it, when all prices on a day are trading above the average, what's happening? Market's moving up. It's pushing the average with it. Every algorithm in the world, I can assure you, given no changes in any other circumstances, because as you know, I do look at other things, just purely on a VWAP basis, guys, they're going to be buying this market. Okay, they're going to be buying this market. They're not going to be playing. Can you see? It just makes no sense to play this as a balanced day, because we're not doing that. We haven't got a flat VWAP. We've got the market being aggressive and clearly telling us, now I'm building value higher. I'm building value higher. I'm building value higher. It's moving up. And that's why the profile isn't that shape, is it? You haven't got a balanced. Look at how the shape of the profile ended up on this day. It almost ended up like a multi-distribution, right? And this is why I did recommend that you read that market profile book, because they'll talk about double distribution days and things like that. I don't really care about that. I care about more what I'm seeing myself. I want to come to that conclusion. I want a book to tell me how I should trade this day. I want to come to the conclusion myself that, oh, we built some value here in the morning. Potentially we could have gone, obviously, in a balanced day, but we didn't. We came out of it. And then rather than returning quickly, you know how I play mean reversion trades? We didn't. The market clearly told us by building volume here in, where was it? Above the first standard deviation. In this region, we actually built frequency, market orders, market orders, market orders. And what happened? That meant we changed shape. Okay, we really changed shape. And in fact, what you can see is we almost just basically built that on its own. So you can see all of this becomes redundant. These probabilities actually moved that way. Okay, much higher probability that we're going to stay up. So you can see in practice, you know, if you don't mind me saying, I think that it's fair for me to say, right? You don't really need to know these specific numbers. I don't care. Like I said, just over time, don't necessarily, you know, think, oh my God, Envy gets the maths, so that's why he's, you know, does well as a trader. It isn't, okay? It's not that I understood the maths better than most guys in the institution, because yeah, I was one of those, you know, to be frank, one of the 1 in 10, 1 in whatever it was that made it in institutional circles. It wasn't because I understood the maths, because then everyone understood the maths. Okay, it wasn't that. It's just because I kind of got the gist of it. That okay, what's happening here? I don't treat this as some sort of magical line. Actually, I'm thinking, oh, as the gradient is changing, I can see the profile is shifting and the probabilities are moving in my favor, and therefore I'm going to use this very loosely, but I could identify that okay, the market is shifting condition. It's almost like I close my eyes to kind of what this specific line was. It was more, I was almost treating it in an abstract way, and I was just trying to almost be fluid with it and just kind of get a feel for, okay, what's the market doing? Okay, market orders are coming in this region, and therefore my probabilities have shifted, and I've just got a higher sort of chance in terms of if I'm trading this as a imbalance day or a trend day, whatever you want to call it. I don't mind, because I did say when I get the rhythm, I talk about different rhythms. So let's go finally and talk about rhythm. Okay, it's really important on an imbalance day, and I want to just discuss that briefly. Okay, so I want to talk about rhythm, and I did say that I wanted to kind of just solidify, and you'll understand why I did a bit of theory here, because I remember I brought this into the last section. So hopefully now, the way I explain it now, will be much clearer why I did that. Can you see what happens is basically, I said to you, look, at the end of the day, you want to be able to identify different types of rhythm. So can you see here, I've written normal trend, and I said I like to call it normal trend, 1 SD imbalance. So what does that mean? Well, we talked about it in the last section. It's like, am I building market orders above the first standard deviation? So you can see it here. So it's essentially this line. This is the first standard deviation. Can you see we've very much got a first standard deviation rhythm, right? I mean, again, like I said, you've got to be loose with this stuff. This was the problem. I always said people would be like, oh, we got a 1 standard deviation. Oh, it's popped down below and now it's popped back up, and they get thrown off by that. I don't. I just think, well, approximately is good enough. But yeah, we can think of it exactly if you want. Ideally, it would be like that. Can you see that? Bouncing off the area. Can you see the rhythm? So what does that mean? Every time we retrace back to the first standard deviation, I'm going to get long. I'm going to get long. I'm going to get long. Okay? So it's essentially this. But what I do like to do to distinguish between different rhythms is, and it's just a very rough guideline, okay? Don't treat it as gospel. Is, and I have noticed this, some institutions, they do like to look at the 0.5, okay? So all you're doing is you're just putting an increment in there, because what's going to happen is sometimes the market will have rhythm here, sometimes it 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 will have rhythm on the VWAP itself. And that's what I like to call a slow trend. And don't worry, we'll cover this. I'm going to go through this with you. Very much this region, which is this region here, okay, is a slow trend environment. In fact, I would say even more than that. I would say, so this is the 0.5, okay, that's the VWAP, okay, so this. So actually, anywhere really in kind of this region, okay, so ignore this, I'm going to just basically go scroll straight over it, but imagine the market was doing this. Can you see how powerful it is for me to identify this? Because if I've identified, oh, the rhythm is what? Slow trend, okay, and that means we're probably building more of a distribution in this region, then I'm going to get long here, long here, long here. Do you see, I'm not going to get long here, because more than likely I'm going to take a bit of drawdown. No, identify the rhythm. This is what I mean by rhythm when I'm talking about rhythm and acceptance on that bullet point in the institutional in the introduction and at the start of every section, where I talk about building hypothesis, context, crucial, guys. When I'm building my hypothesis, I'll be looking at day VWAP, weekly VWAP, monthly VWAP, quarterly, yearly, and I'll be identifying this, okay? Every start of every day, I'll be asking myself, what's the rhythm of the market? On every, I don't like to use the word time frame, it's institutional horizon, really, but let's be honest, it is called the day, the week, the month, the year. It's fine, so you can call it time frame if you want. But I don't want you to think of it in terms of the retail forex chart time frame, all that. No, that's not the true way to look at it. It's to look at it from an institutional investor perspective. What's the rhythm of the market? What sort of retracements or sort of balance to imbalance rhythm are institutional investors using to go and seek value elsewhere? So you can see here in a slow trend, the pullbacks, if you want to call them that, are much deeper. You've got to know that, because you don't want to be entering here. You don't want to be entering here. You want to be entering deeper. Okay, so this is why we granulate this, because ultimately this region is what? It's basically this region here. Okay, so new market orders are building. The profile is changing shape. Okay, it's still very much changing shape, and you're getting a lot more market orders happening here, and therefore the probabilities are still shifting up towards you being imbalanced, but it's just, where are the market orders happening, so you know where to enter. Okay, 1SD, I like to call it normal, because obviously first standard deviation is considered, quite a apologies, keep getting that, don't I? The first standard deviation is obviously very widely used and quite what people like to think of as normal, fair value. We talked a lot about this. So, and let's look at that. So the first standard deviation is, in an ideal world, it's around approximately that. So if we look at it ideally, you'd be doing this. Can you see why it's so crucial? Once you've identified, you're pulling back to this region, long there, long there, long there, long there, as it pulls back. Okay, do you see that's very different to, and I'm going to basically draw, do you remember before we were getting long here, 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 here? Do you see it's different rhythm? Guys, completely different rhythm. Now, all your market orders are coming in here. They're not coming in here. Okay, so your profile, rather than building volume here, you might build a little bit, but essentially, do you see you're now building a lot of volume in this region? And you can see it here. We built a lot of volume. Profile shape has changed, right? It's no longer normal. It's like that. It's multiple distributions. You're building. Okay. Don't worry, I've summarized all of this for you. That obviously in a trend day or an imbalanced day, week, month, whatever, you'll be looking for trades in a normal trend environment of the first standard deviation. Okay. And then finally, so I hope you can see I'm building you up towards actually taking trades now. In this task, all you're going to do in this task is you're going to identify a lot of this stuff. But finally, and this will make sense, fast trend, what does that mean? So this is why, do you see on a normal distribution, how we've been looking at it so far? We've only had the first standard deviation marked, but you see here, 1.5. I talked about it in the last section. This is why I wanted to do this theory, just to kind of solidify the stuff I was talking about before. Now you're getting market orders here, so the market is very much balancing in this section. Okay, what does that mean? Look how far the mean's going to shift much more. Actually, what's going to happen is, and I forgot to mention this when I was talking about the normal trend, is obviously in a slow trend environment, VWAP's going to be very gradually increasing. In a normal trend environment, VWAP's going to be quite rapidly increasing. In a fast trend environment, why is that? Because market orders are coming in much further away. We talked about this in the last section from the mean. So actually what will happen is you'll be like quite an aggressive VWAP, and that helps because obviously it helps you identify that, okay, I've got quite a fast trend environment. So basically this here is the 1.5 SD, and what would actually happen is you would now be bouncing off there. Can you see before we were talking about taking entries here, then we talked about slow trend environment, which was taking entries here. Fast trend, can you see? Why is this so important? Because guys,